This is like a strange recession and credit melt. It's a credit slowdown with no defaults so far. Now, you know, Henny Sender pointed out to me yesterday that, in point of fact, there are, I forget what she said, but there's 11 defaults this year, this quarter, this year, and there are only 3 last quarter, you know, the same quarter last year. Okay, whatever. And, you know, it's been a little bit of a pickup, I will grant that, but it's still near historic lows. And 2007, with all the problems that we had, was the lowest year ever, I think, in default rates amongst leveraged credits. Yeah. So unless the economy gets weaker and continues weak, at this point, I'm not sure there will be a lot of defaults.
Right. And you have all that covenant-free debt that you guys have put.
It gives a lot of staying power to those companies. It allows before leveraged bonds were hair triggers, so even a short recession of a couple of quarters might trigger defaults. Now it's got to really be bad, and it's got to stick around for a while. Yeah. And I can't resist, since you've opened that up, saying that this is why covenant light and PIK toggles and those kinds of things, which people look at as aberrations and sort of private equity bullying creditors into doing when creditors should have been wise enough not to do. I think nothing could be further from the truth. I firmly believe that those kinds of debt structures are in everyone's interest and in the economy's interest. It's clearly in private equity's interest because they preserve the ability for a company to recover. So they preserve even if their equity is underwater in a sort of mark-to-market sense, they preserve the optionality of recapturing that value when the business improves. Right. It's also clearly in the subordinated debt holders' interest because they continue to receive interest. The old way, whenever there was a default or a covenant problem, boom, interest stopped. Subordinated debt went to the floor, and they weren't getting the cash flows anymore. So there's clearly, they continue to get more cash flow. However that company's ultimately settled, they're better off. So the only one that you might argue is not better off is the senior secured debt. Now the truth is senior secured debt doesn't usually lose much anyway because of where they are in the capital structure. And on top of that, by keeping the company intact, so they keep the management team in place, you keep the private equity firm, which if it's a good firm with really strong operating skills is probably best able to fix the problem. By keeping the employees there, by keeping the creditors and suppliers and customers from fleeing, you actually preserve more enterprise value of the company. Right. And that, therefore, benefits everyone and all aspects of society. So I think everyone in this room should go home and tell everyone that covenant lights should be, you know, enacted and something is a must.
We'll all get the word out.